Morning, sir.
Good morning, sir.
Okay, so you're welcome. So let's quickly look at consolidated statement of cash flows. And I don't want to spend up to 2 hours for this class so that you can go back to reading. Um, I want you to spend a lot of your time reading and less class until till our intensive class. And some other revisions I might want to do for you before your exam. So let's quickly address consolidated statement of cash flows. There's no difference between consolidated statement of cash flows, right? And the simple statement of cash flows that I taught you in the last class. There is no difference. Okay, so let me note that for you. So there is no difference between the simple statement of cash flows and the consolidated statement of cash flows. So the methodology for preparation is the same. The methodology for preparation is the same as the two. And meaning that, so this means that what you need to capture is the changes in financial position. If you remember, the approach I used to teach you statement of cash flows was by identifying changes, movement. And when you are able to successfully capture those movements, then you are fine. So, however, the key peculiarities of the key peculiarities of a consolidated financial statement is the presence of items like goodwill. You know that when you prepare consolidated financial statement, you find items like goodwill there. You find items like non-controlling interest there. You find items like non-controlling interest. You find items like investment in associates there. And which one again? Basically, these three. These are the key peculiarities you would identify. So that means in addition to what you have learned, so that means in addition to what you have learned in a simple cash flow by identifying movement in position, you need to know how to identify movements in the above items. Okay. So the first one is when you have goodwill, how do you identify movements in goodwill, really? So the the movement that can happen here, right? The movement within goodwill will be the payment. Let me not call it the payment. Let me call it what you usually call it, the purchase consideration. The purchase consideration paid by the parents to the subsidiary for its holding in the subsidiary. Remember that the way we determine goodwill is by canceling out your payments, your purchase consideration, canceling out against the net asset acquired of the subsidiary. So when you unbundle this goodwill, there is a cash element inside, and that cash element is really that payments, that purchase consideration paid by the parent to the subsidiary. So, however, if 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 the asset acquired, if the asset acquired by the parent, if the asset acquired in the subsidiary includes cash and cash equivalents, okay, this will be used to reduce the purchase consideration. I mean, it makes sense that I paid 100 naira to a customer, to a subsidiary. I paid 100 naira to acquire a subsidiary. And part of what I'm acquiring in the subsidiary is a cash of 20 naira. So what we are saying here is that effectively, what I've paid is 80 naira because it's as good as it's giving me back my 20 naira. So basically, for goodwill, that is the cash movement there. Additionally, for non-controlling interests, right? As far as NCI is concerned, the only cash movements here, is the dividend paid by the group to the NCI. That's really cash movement that can happen. And this can be derived. This can be derived through examination of the movement in the NCI. So you need to examine movement in NCI. You will get this cash movement, this dividend paid as a balancing figure. That's just the only new thing here. And for investments in associates, right? So the movement, the relevant cash movements here will be the parents' purchase consideration, if given, parent purchase consideration in the associate. So that's his investment, the money he paid to invest in the associates, and also the dividend received from the associate. So if there's any dividend received from the associates, we would also derive that. And this can be derived through examination of the movements in the investments in associates. So these are basically the peculiarity of consolidated statement of cash flows. Now let's apply it. If you look at this question, it says on October 1st, 2022, Papaya PLC acquired 90% interest in Bafana Limited by issuing 1 million ordinary shares at an agreed value of 2 naira per share, paying 1 million in cash. So you see that Papaya acquired 90% in Bafana. He issued ordinary shares at an agreed value of 2 million, and he paid 1 million in cash. Okay, so that means the other 1 million would be probably in shares. So at that time, the net asset of Bafana, this is the subsidiary, was this. So this is what he paid 2 million for. This is what he paid that money for. And also the consolidated statement of financial position of Papaya, which is the parent company, is given as follows. Okay. And the consolidated statement of profit or loss is given as follows. And the statement of changes in equity is given as follows. And I said, all other subsidiaries are wholly owned. Depreciation charge of the consolidated statement of profit or loss amounted to 2.1 million. There were no disposals of PPE during the year. Goodwill is not impaired. NCI is valued on a proportionate basis. You are required to prepare consolidated statement of cash flows for Papaya PLC for the year ended December 31st, 2022, using indirect method in accordance with IAS 7. Okay. Now, using indirect method, the first thing we need to do in any questions of cash flows, you need to calm down and keep it simple by examining the movement. We saw the question last week where the examiner already gave you the movement. So that was even easier. I didn't have to go through all these workings because they have already done the movement for me. I just went ahead to prepare my statement of cash flows. But here, I'm not giving the movement. And I've taught you that all you need to do is just to go to your statement of financial position and do your movement. Just examine the movement. And what are the relevant movements here? The first item on the statement of financial position is PPE. So let me look at the movements in PPE. So workings 1, property, plant, and equipment. What's the level of rounding off? Think in thousands. Yeah. So I would do, what's my opening balance? From the question, my opening balance is 23,000. And from the additional information, I was told that there was a subsidiary, this. However, when this is consolidated, as soon as you do the opening, then you know that we used to consolidate subsidiaries assets as well. So I expect this 1,900 should have been added. So subsidiaries assets, which is 1,900. Then depreciation charged for the year. I was told that depreciation charged to POL is 2.1 million. Is 2.1. And really, that was it for PPE. They said there was no disposal of PPE during the year. So I close it up. If I sum this, I expect the expected closing balance to be this. Can you please give me the figure? How much are we looking at?
22,800.
22,800. But what was the closing balance that we had? Our closing balance was 25,000. Our closing balance was 25,000. And what does this shows us? This shows us that there's an increase in PPE representing an acquisition of PPE. And that's how much?
2,200.
2,200. Will that be an outflow or an inflow?
Outflow.
Outflow, because we bought more.
We bought more. Right. Now, having examined the movement in PPE, the next one is, where's the next item? Is goodwill. You will see that in 2021, goodwill was 0. In 2022, goodwill was 660. And that's because they acquired a subsidiary. And I've told you that the relevant cash movements here is just the money we paid to acquire the subsidiary. And how much did we pay to acquire the subsidiary? We were told that we paid 1 million. So let me just do this. Acquisition of subsidiary. I'll just do my purchase consideration. We paid a cash of 1 million and cash and cash equivalent acquired. Because when we paid 1 million to somebody, and part of what we acquired was also cash of 100. So that means effectively, let me put the level of rounding off here so I can remove this. And there was cash of 100 in his books. That means effectively the cash outflow is, so the cash paid to subsidiary is going to be 900. And this obviously is an outflow. This obviously is an outflow. And that's it. And I want to ask you a question. This has nothing to do with cash flows. This has nothing to do with cash flows. It just has something to do with what I've taught you so far. Let me see if any of you have taken some learnings from there. Who can tell me this 660? Who can tell me how was it determined? This 660, how was it determined?
Sir, it is the normal way. If we acquire a new subsidiary, sir, we calculate the goodwill of this subsidiary, sir. So it is a normal way we have it, sir, the 660.
Okay. Okay. I know, I hear you. So what's the normal way?
It's by canceling out the investment.
Okay, we calculate the money we pay. We check the NCI also. So to have the 100% against the net asset report. Sure, you understand, sir? Against the net asset. So we now do the plus and minus and get this amount.
As a proportionate share, proportionate this thing of the net asset.
Okay, yeah, that's correct. That's correct. That's correct. Okay. It means you guys understand exactly what you're talking about. Okay, that's fine. Let me see. How much was the purchase consideration here first?
2 million naira, sir.
2 million naira.
2 million.
There is two different considerations there. There is one share and there is other one cash payment.
Cash. So the share is how much?
The share, they agree on 2 naira per share, so it's going to be like that's 2 million. That's 2 million naira.
Okay,
Yes.
good.
Plus
So
the
altogether
cash
is 2
payment.
million.
That's plus the cash payment. That's 3 million.
No, the total agreed value is 2 million, right? So, but they say they
Yes.
are going to pay 1 million in cash.
Okay.
They will pay 1 million in cash. So the total purchase consideration is actually 2 million. So how much is now NCI?
NCI is I think 90%, 10%. That's 10% of the total net asset of the
NCI is going to be
of the
200,000. I think that's 10% of 2 million.
No, it can't be 10% of 2 million.
So 10% of the asset acquired now.
Exactly.
Okay.
That's
10%
10% of the asset acquired. So what's the asset acquired?
asset acquired is 2.6.
2.6 million. Wait, though.
Yes, it's
We have
2.6.
property at sorry,
Yes, now
property
they said at that time the net
2.6. So
asset
it's 2.6.
2.6. So 10% of 2.6 is 260. So if I add 260 to 2 million, that's 2 million to
2,260,000.
2 million 260 minus net asset acquired. But that will not give us 660 now.
Oh, sir, they pay 1 million cash. They paid 1 million cash. That means plus the share amount, the amount of share they pay, that's 3 million, sir. That's they
3
decided to pay
million.
in yes,
Okay.
3 million. That's what I'm saying.
They
They
didn't tell
decided
us
to
they
pay
paid
2
2
million
million.
in form.
Okay,
Sir,
okay.
they pay with share, which amounted to 2 million. Then they
Yeah.
now pay cash of 100 million and 1 million. So the total consideration is going to be
3 million.
3 million.
Yes.
Okay, okay. Okay, so it was a shares and cash consideration. Okay. Okay, so if you now do that 3 million plus 260 minus 26, Abi, it should give us 660.
It won't
Yes,
be
yes, sir.
26.
No, not yet.
260.
No,
Yes,
it should give us,
260.
should be NCI is 260.
Yes.
Yeah,
Yes.
two.
That will not be
So
correct.
that will not be correct. Yeah, that's perfect. Yeah, good guys, good. Okay, so let's move on then. So we have identified movements in goodwill, and we can see that the only cash movement there was just the 1 million they paid, because the other 2 million is in shares. So they only paid 1 million minus the cash they acquired. So leaving us to just 900, which we have shown our workings. Then we need to do the movement in inventories. Okay. So the third one is my inventories. So what's the opening balance of my inventory? 12,000. What's my closing balance? 14,500. We have an increase in inventory of how much?
5.
Don't let us forget, we need to be careful so that I won't forget subsidiary. Subsidiary. Yeah, there was a subsidiary inventory of 700 that will have been included. So 700. That means our expected closing balance is actually 12,700. And we have so what's the increase in inventory?
18.
18. Is this outflow or inflow?
Outflow, sir. Because
Outflow.
Outflow.
we bought more. We bought more inventories, so we pay.
Outflow, yeah, correct. Okay, so somebody said she did not, or he did not get our explanations for goodwill. Again, we don't need that calculation here, okay? But the answer is the purchase consideration is we paid 1 million cash and also shares of 2 million, which is 1 million times 2 naira. So purchase consideration 3 million. NCI value is 10% of 260. That's 260. Of 26, that's 260. So total is 3,260 minus 2,600. That gives us 660.
Sir, sir,
Yeah, Michael.
sir, if you look at that statement, the first statement, Bafana be issuing a share of 1 million naira ordinary share at an agreed value of 2 million. Now, 2 naira per share, comma, paying 1 million in cash. You know, it translates into the whole share is 2 million and we pay 1 million naira in cash. This is what this illustration states, sir.
And
So,
you
but,
see,
sir,
No,
which is why I was even that this on a more serious note. That was how I was looking at it myself.
but if you
Until
now
when
look into,
Femi said that, yeah,
Sir, yes,
because
sir. No. What?
because now, as they say, is a 3 million naira. You know, I have it in my brain that they are now walking back. You know, you have the answer. You now pass, and now get to, you understand. This is what I
yeah.
think in my brain, sir.
so,
No,
so,
no, sir.
so
Hello,
What
hello, sir.
I disagree with what he says, sir.
yes,
Because
I
yes,
too.
because if they wanted to say he's paying, he's not paying cash. He's paying with shares. So that one does not involve cash. Then after the share, he's now paying 1 million naira cash. So he cannot be paying with shares and still now divide the share into cash and share. So it's not possible. So if he's paying with share, he has paying with share. If he's paying with cash, he will pay with cash. But now they said he pay with shares. The share is amounting to 2 million naira. They now have to pay 1 million naira again, making the total consideration 3 million naira. That's what I thought.
Yes, you're correct.
And in addition, sir, I think there is a purpose of putting that 2 naira there. And there are so many ways of getting our consideration. We have by cash, by differ, and contingent. So to me, I think the second guy is right. There is no pash there. And
Femi is absolutely correct. And I think Mr. Wasiu has said it several times. They will make it look confusing. So you just first have to first extract what they are trying to say. They didn't give us the amount, that's the total amount of consideration paid. They only give us in piecemeal, which is in two different statements. So it is you that will
Yes.
now put it together.
You should not overthink it. If you overthink it, you
You
just
get
miss it.
wrong. Okay. Nice one, nice one. I have intelligent students here. You were saying something, Ufoma. You don't want to talk.
Sir, I said, sir, good morning, sir.
Morning.
Um,
Okay. We can't hear you again, really. Okay, don't worry. I think you're trying to say that if we did not pay additional money, then what will be the impact of that? So that means it will just be an outflow. It will just be, I said outflow, inflow. It will just be an inflow as acquisition of subsidiary. Because it's like we only received, I say this goodwill resulted in inflow of cash, something like that. So from don't
And it
worry, you
will,
can mute yourself now.
and if we didn't pay the 1 million, it will result in like a is it gain over bargain or something like that, because
Yes,
you are paying 2 million and the asset is 2.6.
exactly, something like that. Okay, so I think that's clear, really. So that's just we're just bringing forward some knowledge we have before, but we don't really need all that in cash flows. They have already computed goodwill for us. We just need to extract the cash elements here, which is just the cash we paid minus the cash we acquired or that we received from the subsidiary. Okay, moving on. So we have dealt with inventories. Let's go to receivables.
hello, sir. Sorry, my network logged me out. I didn't get the explanation of my question. Sorry about that.
So I said your question is that what would, if I get you correctly, what would this be? What would this acquisition of subsidiary cash elements be if we didn't pay 1 million? That means it will just be an inflow of 100. It will just be an inflow of 100 and that's it. That's all the cash element that would apply. And of course, this 660 will not be there again. Probably it will be a gain and bargain purchase. I mean, something like that. Yeah. So trade receivables. So what's the balance of my trade receivables? I think I saw 11 million. Yes, 11 million. And subsidiary would have been included. That's 300. So subsidiary 300. What's the expected closing?
11.3.
11.3. But what's now the closing balance?
13.7.
13.7. So here there is an increase in trade receivables by how much?
2.4.
Inflow, outflow.
Outflow.
Flow.
Inflow now, receivable.
How, yeah, can you explain how is the inflow? How say?
Sir,
How is it inflow?
no, I've checked his inflow. That's he spent more. He's awaiting, but he did not come back. There is money in outside that he's receiving. His outflow from his bank account. Sorry.
Exactly. So he has given more goods to the
Yes, without receiving cash.
yes.
His outflow.
Sir, please, I have a question, sir.
Okay, Tony.
So I'm sorry, I came in late, a little bit late. I don't understand the reason why we are doing this adjustment. I just want to get the plans. I want to know the reason why we are doing all these movements. Thank you, sir.
Hold on. Were you in class last week?
No, sir, but I've watched what's it called, the video.
And then you should know why now. This is all we do. Whenever you are
Yes,
doing
you know,
something
yes, I know, but the movements in, this is a group cash flow. And the reason why we are adjusting for the subsidiary, that's why I think.
Okay. So you know that for example now, PP, they give us consolidated opening, consolidated closing. You know, consolidated will include asset of the parent and the subsidiary. So when you are doing movement, it should be the opening plus any assets that you acquired of the subsidiary that year minus depreciation will give you the closing consolidated. So that's why we are including, because we believe that that of the subsidiary is also included here. So that's why it's included now in the movement. And that's why we are including any subsidiary assets in the movement as well. So that's just the new thing here. Because this is consolidated, subsidiaries assets would have been consolidated. So, and that's why we are reflecting it in the movement in the assets, because it's included there.
Thank you, sir. I think I'm okay. Thank
Yeah.
you.
Sir,
So,
sir, please, I want to ask a question, sir. Sir,
okay.
please. Now, in this thing, in this movement, I can write PP, put the old for 2021 and 2022. I will negate it from each other. If it's increase, PP, if it's increase, it means outflow. I will jacket it. If it's reduce, it means inflow. So I will leave it like that. Is it okay like that? Instead of putting this way you are showing us, sir.
So how do you intend to adjust for depreciation and subsidiary then, if you just do this one alone?
No, I just use the example of PPE, sir. If it's like all these assets we normally do. Oh,
Like the one yes, of course. You see, like the one we did last week now, they already gave us the movements. So the one you have said actually is also fine, in as much as you can align it with any additional information given in the question. Okay, if you can align it properly, in fact, I can say that's the best way to actually do it, because just use your mind to look at the movements, you know whether it's an inflow or outflow. Then that's the movement you actually need. But you see, there can be a lot more to that movement. Which they will tell you in the additional information. It could be that they have sold, it could be that they have acquired, it could be that there was an impairment. So which is why you can't rush beyond. It's better you just see the movement so that whatever has happened in between, you have captured it. Then you can do your expected closing. You don't want to miss out any of those details like that. It
sir,
doesn't really take time.
sir, what I'm trying to eat is that will this give me extra mark more than that? Because if I start to do this adjustment in an exam condition, sir, a question of 15 mark, I'll be spending 2 hours. Oh,
You think so? No, you won't. No, you won't. I don't know how you write, but if you're writing like the way you should write, you should not spend 2 hours. That's why you need to sit down and solve these things yourself, so that when you're talking, you're going to be speaking from an informed position with data, not just talking because you just think that's how. No, even me, most of these things, before I come to teach you, I will sit down and solve it. I don't just come randomly and start teaching. If you identify something, is maybe because I just intentionally want you to take learnings from that. I want to hear from you and all of that. I've actually solved it myself. And when I was solving, I solved very slow, as if I'm a student. And I solved this within less than 20 minutes. Because it's how long will it take me to do movements? Few seconds. 2021 opening. It's error prone. It's error free, because you're going to capture everything you're supposed to capture, and you just have to. That's the whole point of cash flow anyway. So Michael, you have to ensure you do it. And from the way you're also talking shows you have not been practicing. Please practice. Please, you need to start practicing.
okay, sir. Thank you,
Yeah.
sir.
So receivables, we have looked at receivables as well. Then share capital. There's the share capital here, and there's the share premium here. So let's do the movement for that. So share capital, my opening share capital is how much?
10,000.
10,000. Issue of shares. We issue shares to the subsidiary. We issued 1 million shares at 2 naira each, but the nominal value is 1 million. And how did I know? If you look at the question, the statement of financial position, you'll see ordinary share capital of 1 naira. Okay, that means for them to have issued the shares at 2 naira, that means the extra 1 million, the extra 1 naira is share premium, which will impact the share premium movements. So, what's my expected closing?
11,000.
So, what closing do I have?
11,500.
So, So why are we having 11.5? It should be 11,000. So what's this increase about? Who can tell us? What would this increase be about?
Is it the share premium?
Premium.
No, the premium is actually separate. The premium is separate. The premium is also 1 million, not 500, because the difference I'm seeing here is 500.
Now let's see the question.
Maybe they issue another share.
What was the subsidiary
Sir,
shares? Let me scroll back.
scroll to the question, sir. Sir, let's see the equity side.
Let's say the subsidiary share, but we've not added anything from subsidiary.
Sir, let's see the equity side, sir.
The equity side of the question.
Yes,
Yeah,
sir.
scroll down a bit, sir. Yeah, scroll down a bit, sir.
The equity side is for retained earnings.
The closing balance is 11.5, sir. The opening balance is 10,000, so I think it's still okay
But
without considering.
why are we having that difference?
It seems they add more shares.
Where is that?
Okay.
Where did they tell us that?
It is not specified.
Sir, the cash paid,
Oh,
does
the
it has an element of premium?
No, the cash paid cannot have an element of premium.
If that means there is issue of share, maybe they didn't give us the information.
All right, no problem. So, issue of shares. That's the only thing, because that's why these movements are very, very important. You can just identify like a movement. Just that means is inflow. That means this will be inflow. No, this can this be an inflow?
It's outflow, sir, because issue of share you also send money out.
So this 1 million, we did not actually receive money from the subsidiary.
Financial.
What we received from the subsidiary was assets. So we just issue shares to subsidiary. So is this balance here that can only be an inflow, but we don't have the details of that, but at least we are seeing that movement there. So these movements are very important. Otherwise, you will not have seen that. So the share premium, what's the opening balance of the share premium?
5,000.
5,000. Issue of shares, how much? The 1 million shares we issued times 1 naira premium. What was the balance?
That's 6,000.
6,000. So what was the closing balance we have?
6.5.
6,500. 500 is still sticking out.
It shows that premium again.
6,500. So there's a difference of how much?
500.
500.
Hold on, is this inflow or outflow?
Airflow.
I even went to write it. Oh,
It's inflow.
okay. So
Sir, I still don't
500,000.
understand this the issue of shares aspect of the 500 for ordinary shares and the share premium.
Okay. You know that they told us that where is it? We issued shares to this subsidiary. We issued 1 million shares at 2 naira each. Okay. So at 2 naira, that's the breakdown we did. So for that of share capital, when we're examining the movements, the opening consolidated was 10. The issue of shares, the 1 million shares times the 1 million shares times 1 naira, which is the nominal value, because anything that goes to share capital has to be a nominal value. So that's why this is 1 million. Then the expected closing is 11,000, but we saw that the closing balance was actually 11,500, showing that there is an inflow of 500. So the same thing as this. So this issue of shares is just the fact that they told me that there was an issue of shares which is at 1 naira, which is at 2 naira. So the 2 naira, 1 naira is the nominal value. The extra 1 naira to make up the 2 naira is the premium on those shares, like that. But at least this movement is showing that there was an excess, there's an inflow as a result of this, from this movement in share capital and share premium.
Okay, sir.
Okay, so what's the next item after share capital and share premium? The next item is retained earnings. And the opening retained earnings here is 15,300. So we have retained earnings. So what's the opening balance? I said 15,300. So what will cause movement in retained earnings from the question? What
Profit
usually
for the
causes
year.
profit for the year? And what's our profit for the year?
We
What's the
have
profit?
27 for profit for the year, but we also have profit attributable to owners of Papaya PLC, 2016.
Okay, that's correct. If they have done the movement in retained earnings for us here under the statement of changes in equity, so I really don't need to do it. So that means here they did opening the profit for the year. So you have to be very careful here that you are not picking 27. What you have to pick is the profits of the parent. Okay, because that of NCI will go to NCI. It doesn't go to retained earnings. It goes to NCI. So the profit for the year is 2,610 and the closing is 17,910. So here there's no cash movements. The movement is just profits. So let me see. The closing was 17,910. Okay. And this is 17,910. So there's no cash movement in the retained earnings. So the next item is NCI. So NCI moved from 0 to 310. So let's see the movement in NCI. So non-controlling interest. So the opening balance was 0. What causes the movement in NCI? You will get share of profits in subsidiary. think they said it's 90 or so. Yeah, NCI share. A profit attributable to NCI is 90. So my expected closing should be 90. But what's my closing balance? My closing balance is 310. So NCI increased. So what's the increment about? That's because, let me not forget, acquisition. He also acquisition of sub, which is 10% times 26. Don't let us forget. I almost forgot this, which is 260. Yeah, you know that we acquired a subsidiary at the beginning of the year. So that means the expected closing is actually 340. So, but the closing is 310.
Is it 340 or
It's
350?
350.
Okay, 350. Thank you. So what's the difference of 40? What do we call that?
So could that be
Um,
dividend?
dividend.
Yes, now. I already taught you today now. That's dividend
Dividend.
to NCI. That's dividend paid to NCI. I mentioned it before I started today. Non-controlling. So it's dividend paid. Movement is always dividend paid. So this would be an outflow.
Sir,
So
hello, sir. Please, what did you say on the retained earnings, sir? Please, I was thrown out of the net. I mean, by the network, sir. Please, sir. If you can give me a minute and explain that to me.
yeah, there was no movement. There was no the movement wasn't cash movement because they even already gave us the movement here in the question. I was given the movement between the opening and closing. The movement is just profit for the year. So that was why we ignored it. There was no cash movement.
Thank you, sir.
All right. So after NCI, then we have trade payables. So opening is 15.2 for trade payables. Subsidiary, what was the subsidiary trade payables? Was 400. Was 400. What was the expected closing? 15,600. What was the closing balance? 16,900. 16,900. We have an increase in trade payables. What was the increase about? How much?
13.
Outflow or inflow?
Inflow.
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 Inflow, that's correct. After that, we have movement in tax. Opening is 1,000. So income tax,
15.
they want 5 or 1,000.
15.
Opening is 1,000. It's closing that is 1,500. Opening 1,000. There was no deferred tax in this case, so there was no deferred tax. So, but what was the tax for the year? Where's the P&L?
1,500.
Okay, income tax for the year is 1,500. What's the expected closing?
1,500. That's 2,500, sorry.
What was the closing balance?
1,500.
What's the difference? Difference is what?
1,000.
1,000.
That's tax rate.
That's paid. Outflow.
Outflow. So we are done. So all things being equal, these movements will not take you so long in the exam. You can sit down and try to just practice the movement yourself, if not for discussions, explanations, and all of that. So now that I'm done with all the movements, then I can go ahead and prepare my reports for Papaya. Is it Papaya? Papaya PLC. Consolidated statement of cash flows. Indirect method for the year ended 31st December. I think it's 2022.
Yes, sir.
Yeah. And level of rounding, thousands. Start with operating activities. Now, your operating activities, I would advise that if you are given profit from operations, start from there. But if you are not, I'm given profit before tax. So I'll start from profit before tax of 4,200. So ordinarily, I will have adjusted back for interest, but there was no interest in the P&L. So I just moved to admin and adjust for non-cash items. So adjustment for non-cash items. What that comes to my mind is depreciation, and it was 2,100. Apart from depreciation, was there any other non-cash item?
Dividend.
Yeah. Was there anything like profit or loss on sale of assets, impairments?
No.
There was nothing like that we identified here. So there's nothing like that. It's just depreciation that we're going to add back. Then you do changes in working capital. Identify there was an increase in inventories. Where is the increase in inventories? 1.8. We had 1.8 outflow. There was increase in receivables, 2.4 outflow. Then payables, there was increase in payables, inflow 1.3. So can you cumulate this for me, please? What does it give us?
Inflow of 3,400.
3,400. Then the income tax paid, 1,000 outflow. Then that gives us our net cash inflows from operating activities, which is 24. Then we go to investing activities. And what are the investing activities items that we have? From our PPE,
PPE.
there was acquisition of PPE 2,200. After that, we did acquisition of subsidiary of 900. After acquisition of subsidiary, was there any other outflow from investing activities? I can't see anyone again. So if I accumulate these two together, what does it give me?
Outflow 3,100.
Outflow 3,100.
Then financing activities. I have issue of shares. There is the share capital. We had 500 in float. And there is share premium. We had 500 in flow from our workings. 500. Okay. Then afterwards, we had dividend paid to NCI. It was 40. And from what I'm seeing, we have touched every of these are workings. So is there any other movements that we haven't touched? No. So how much is this?
Inflow 960.
Okay. So reconciliation of cash and cash equivalents. Cash and cash equivalent during the year. Which is 2,400. This is outflow. Minus 3,100 plus 960. What does that give us?
260, sir.
260. Outflow or inflow?
Inflow.
Inflow, sir.
So what's my opening cash and cash equivalent?
500.
500.
Oh,
What's my closing cash and cash equivalent?
760.
So
It's correct.
this should be the same thing as the closing. If it's not the same, it means your cash flow is not correct. But in the exam, you shouldn't start don't panic. Don't just continue. Probably because maybe you omitted something. So ICAN doesn't care about your final answer. You care about your process. So you will get a lot of marks. Just do something, which is why, Michael, so to prepare the cash flow itself is not difficult at all. The major work is identifying all the movements. That's what will take the major. After that, you're just plugging in. If you know what you're doing, you're just plugging in like that, like that, like that. Okay, so that's the end of this question. Now there's another question here. Let's solve one more question, then I'll discharge you guys for today. So a point of note to the skills, guys. So this one we solved is skills question. This is skills question. Now this one we want to solve is professional question. So you can just follow just to, because I've seen I can bring in questions from professional to skills, but there might be some things that you might not be familiar with that are beyond your level. I think there's one of them here, except aside that one, every other thing you should be able to follow through. So let's look at this question. This was the compulsory question last night for professional. It says Breakthrough PLC is in the process of releasing its financial statements through one of the daily newspapers on or before May 31st, 2004. The following drafts were prepared by the company's chief accountant. So they gave us a consolidated statement of financial position, and also consolidated statement of profit or loss. Some key items are here. When I look at consolidated, few things I want to note. There is share of profit in associates. You know that I need to do something around that. The income tax, there's a portion that relates to tax on income from associates. You know that I need to do something around that. It relates to tax on income from associates. Then, yeah, profit attributable. And they also gave me statement of recognized income and expense for the year. This P&L. So, I mean, this is OCI. This other comprehensive income. What I'm saying here. Yeah, this, because they brought in this 910. That's the 910 as profit for the year. There was impairment losses against valuation surplus. So I don't know, whoever did this was just trying very hard to ensure students fail. Because I don't know why on earth will he call this statement of recognized income and expense. What is that? This is OCI. So, and this is statement of changes in equity from recognized income, whatever name he called it. We had dividend paid, we had new shares issued, movement, equity, and all of that. Now, additional information. They said any impairment on goodwill has been included in a draft financial statement. That means here now they are telling me for them to have made this comment, that means there is an impairment on goodwill. Then what happened? Let me check my goodwill. Okay. Goodwill in 2022 was 50, in 2023 is 60. So where is the impairment? It's even increased. Yeah, we'll look at it. But they said there is an impairment of goodwill. Also, there was no disposal of PPE during the year. Okay, noted. But the depreciation charge for the period was 120 million. Noted. Number 3, it was established there was no actual gains or losses. Noted. Number 4, included in dividends paid during the year was 800 million paid to Waterside, a subsidiary company through which Breakthrough conducted investing activities. Okay, hold on. Let's look at this statement together. So I think there was a dividend paid here. Yes. There's a dividend paid of 892 million. And this dividend paid, when you see dividend paid in the books of a parent, it really reflects the dividend that the parent paid to its own shareholders. That's what dividend paid will reflect. So that is a cash element. It's a dividend it paid to its shareholders. So what's happening here? Where is it? So they said included in the dividend paid during the year was an 800 million paid to Waterside, a subsidiary. Hold on. How can a parent pay dividend to a subsidiary? Is it no subsidiary that is supposed to pay dividend to parents? What's wrong with these people? How can a parent pay dividend to a subsidiary? I'm the one that invested in the subsidiary. It should pay me returns. It should pay me dividends. So what are they talking about here?
For me, I would think
What
maybe
if they give
is
them shares in exchange for payment?
no. What
And
me
then
I'm thinking is they acquire is a controlling this thing. So maybe that money is paid to NCI.
But if they will pay to NCI, it will be a subsidiary who will pay to NCI now.
Thank you
We are
very
not
much.
in charge of that.
Thank you very much.
I'm thinking they want to confuse us.
Exactly. So if it's paid to, it should be, I mean, if it's me, right, I'll just ignore. Because it doesn't make any practical sense. Maybe the guy made a mistake or something. I can't figure it out. Seriously.
Will it be a bonus in the exam?
Just do what you have to do. Anything that does not make sense to you, leave it. Don't see. What you need to do is this. Reporting is process based. Don't allow one additional information to disrupt your process. Anyone you don't know, leave it. Move to the next one. Just ensure you do something. Just do what you know. Leave what you don't know. If you have an idea of what you don't know, put your idea there, but don't do what does not make sense to you. Don't just say because they gave you this figure, you have to use it. If it doesn't make sense to you, just leave it. So that's why you need to read, understand, and do what makes sense, right? Me, I cannot make sense out of this because they said I cannot pay dividend to my subsidiary, except if somebody can really explain to me what these guys are talking about, but it's not logically reasonable for me to really figure out what they are saying. But again, they went ahead to say the transfer was made on January. They said the transfer was made on January 1st, 2023 for a specified portfolio of investments, but no transfer of profit or loss occurred. 95% of profits and 100% of the loss in the specified portfolio of investment to be transferred to Breakthrough, which is the parents. This one makes sense now. That You know me, I'm the one that is breakthrough. Okay, that any profit that the subsidiary makes, it give it to me. Any profit that the subsidiary makes, it would send that profit to me back. And any loss he make, he would give me, I think, 95%. 100% of the loss. Okay, I will take 100% of the loss. I take 95% of the profit. So at the end of the year annually, and the capital is expected to be returned in 4 years' time. And the capital is expected to be returned in 4 years' time, meaning that the subsidiary will return back the capital in 4 years' time. Okay, so the only thing I can say here is this, that included in dividend paid during the year was 800 million paid to Waterside. Okay, so that means that this is not dividend paid to Waterside. This is an investment in Waterside. Yeah, so I'm going to treat this as an investment in Waterside, not dividend paid to Waterside. So that's the interpretation here. So it is an investment, not dividend. So they said include, but why did they now include it as part of dividend? Why would they include investment in a subsidiary in dividend paid?
Maybe it's
Anyways,
the accountant's error.
It's the
maybe.
accountant's error. That's what I'm about to say, sir. It might be the accountant who mistakenly
Okay.
wrote it as a dividend.
And I'm thinking maybe Femi was the accountant. So they gave me the statement of financial position of Waterside as at, yeah. They gave me investment at fair value, share capital, retained earnings. So unfortunately, okay, this explains this further, that it's really an investment. And my investment has even gone down to 780 because the guy is making a loss. Okay, that makes sense. So if you look at this share capital now, it's now 800, which is that investment of 800. Okay, so retained earnings is a loss. So that means my investment now has come down to 780. Okay, yeah. So now we know how to treat all of this now. The only cash movement here is just the 800 million. No, Tom. All these other ones, story. Okay, that being said, number 5, they say Breakthrough is yet to make provisions for its 70% acquisition and holding in Dandy on January 1st, 2022. However, the company wants to set up a provision for construction cost of 20 million respectively.
Ètò nǹkan kan sọ èyí.
Yeah, Tony, mute yourself. The fair values of the net assets acquired were as follows. Okay, so that means this guy acquired the subsidiary during the year, and they have not even accounted for it. It's not even in the books at all. Okay, it's in the books, but it's yet to make provision for its acquisition. Okay, whatever it is, the company wants to set up provisions for this 20 million has no cash implication at all. Okay, they said the purchase consideration was 200 million in cash and 50 million discounted deferred consideration payable next year. The difference between the discounted value of the deferred consideration and the amount payable is included in interest expense. Okay, so that means here now in this note 5, the cash element here is the purchase consideration of 200 million. And as part of the asset of the subsidiary that we are acquiring, there was no cash there. So that means this 200 million is purely cash. This 50 million is a deferred consideration, so no cash effect right now. So no cash effect right now. And with this acquisition of subsidiary, I will use that to check, I will use this to check that impairment they were talking about here. You know, they said there was an impairment of goodwill, so I will use this to check it. Since I acquired a subsidiary, so I will use this one. I will have to calculate a goodwill and see movements in that goodwill. to get the value of that impairment. Now, they say the composition of current liabilities, non-current liabilities, and retirement benefit are as follows. That means they are breaking down all these liabilities for us because they did not break it down here. So they want to break down non-current liabilities and current liabilities. They want to break it down for us, which they did. So they gave us the component of each of them. So they want us to come and do our movements here, like this. They also gave me movement in retirement benefits. So the skills guys will not know this because there is no IAS 19 in your syllabus. So you won't really, you should be able to follow. So A, you are required to prepare breakthrough group consolidated cash flows. You see, let me tell you something. This 20 marks question, and in a 20 marks question, do you know how many minutes you have to solve this question? Can anybody tell me? A 20 marks question, how many minutes do you have? Anyone?
30 minutes.
How did you get that?
You mean the 30 minutes mark?
Yes, yes.
You will divide five questions by the number of
Okay.
hours.
Yeah, that's correct. So you have 180 minutes in the exam, right? 180 minutes. That's 3 hours. And even more, they give you 15 minutes within time now. So 180 minutes, you are fighting to get 100 marks in 180 minutes. So we have 1.8 minutes for every mark. So, and that should inform how you should answer the question. A 20 marks question, you have 20 times 1.8, and that's 36 minutes. So, and that's how you are going to attend to all questions. If you have a 2 marks question and you are now sitting down in a 2 marks question, you want to get everything, my dear, you are wasting your time. So 2 marks, if you see 2 marks, just multiply by 1.8. If you are spending more than that time on that question, you're in trouble. So this you have to solve in 36 minutes, which is more than enough to do your movements. Again, no matter how complex a question is, a statement of cash flows, start with your movements. Start to simplify everything for you. As soon as you have done your movement, every other thing will just be easy, which is what I'm going to do. I just start my movements. And the funny thing is that the examiner will have explained most of the movements in the additional information. So let's see this. This is a very good question because, it's a little complex. Not complex, it's straightforward. So opening is 2,010,000 for opening. Opening balance for property, plant, and equipment. $2,010,000. Now, the examiner already told us, they told us that there was no disposal of PPE, but there was depreciation of 120 million. So I know that there's depreciation of 120. And that's the only thing, really. The only thing, then now I know that this is consolidated. I will just go and look at the subsidiary they bought. They bought a subsidiary, and the PPE in that subsidiary was 140. They bought a subsidiary during the year. So 140. And I think they also mentioned something, I almost omitted that. Yeah, I know that I saw something on PPE. In this OCI, there was impairment loss on PPE. Can you see 190? Have you seen it? And if you go to your statement of financial position, if you go to your reserves, you see the movement. I will have captured it anyway because I do movement, so I won't miss anything. and there's nothing that we miss. My own cash flow, I can always confidently say that it's always balanced. Because when you capture all movements, it's balance. So if you look at these movements, it decreased by 190. Decreased by 190. And apparently, it's because of these impairments, you know. They said impairment losses on PPE offset against revaluation surplus. So it was what offset that revaluation surplus. This 190 from 290 to 100. So that means part of these movements is impairment loss. I mean, it's clear now that there was an impairment loss on PPE. Now, these are all I know from the question. So, what's my expected closing balance? What's my expected closing balance?
1,840,000, sir.
So, but what's my actual closing? $2,630,000. 2,630,000. 2,630,000. So I can see increase. So acquisition of PP. How much is that?
790.
Inflow, outflow,
Outflow.
outflow. I'm done with my movements. I move to my second movement. That's goodwill. Now, in this goodwill, remember what I've said. Ordinarily, goodwill should remain constant. This 50 should also be 50 in 2022. And at worst case, it should reduce, showing that there was an impairment of goodwill. But here it increased, so I need to examine it. And in my examination, the first thing I need to establish is the fact that, yes, they acquired a subsidiary and they actually paid 200 million. So as a result of goodwill calculation, I will know that there was an acquisition of subsidiary and there is an outflow of how much? Of 200 million. In addition to that, I need to determine goodwill. I have to, just so that I can explain that movement. Otherwise, I can't. Because if they say goodwill is increasing, what will have cost it? There can't be revaluation surplus on goodwill. No. So what can happen is we acquired a new subsidiary and there was additional goodwill. So I need to examine that. So what's the purchase consideration? I paid 200 million, right? Cash. And there was a deferred consideration. How much was the deferred consideration? 50 million. You see, what I need for deferred consideration is the present value of the deferred consideration, the present value of it. So now the present value of it is 50 million. Though they told me that the future value is 58 million, and they said the difference has been included in interest. So I know that there's a portion of interest expense that is non-cash that I need to tackle when I'm doing my movement in interest payable. So hopefully I remember this. But what I need right now is a discounted future payment of 50. Then I get my non-controlling interest, which, how many percent again? How many holding did I acquire in this subsidiary? Okay, 70%. That means NCI is 30% of net asset acquired, which is 320. So 30% of 320. How much is that?
Oh my
96,000.
96,000. That's NCI. So what's the addition of everything? Three, four, six.
346,000. 346,000.
346,000. So what's the closing balance? Sorry, what's the net asset acquired? $320. So what's the goodwill?
26.
26. So now this is the goodwill that happened during the year. So my opening goodwill, my opening balance of goodwill was actually how much? I think it was 50. I remember clearly. Is it? Yeah, 50, closing 60. Okay. 50. So acquisition during the year, which is the one above, 26. So that means my expected closing should be 76, but my closing for my goodwill was actually 60. Okay, so that means there is an impairment of goodwill of 16, which is a non-cash items that we're going to eliminate. Okay. All this, not stress. I mean, all of you know how to compute goodwill. So it's just, this one, I'm just doing the movements in the goodwill. Just because the examiner told me that an impairment, if you look at this additional information one, they said an impairment of goodwill has been included in the account. So I need to get it. And I've gotten it out. Fine. So movements, very important. So the next item is investment in associates. Let me do my movement for that. That's note 4. Investment in associates. I think the opening balance was 540. 580. Opening balance 580. Then share of associates profits. We find this in the P&L. Share of associate profit is 60. Have you seen it? Then share of associate tax is going to get tax. Usually deduct tax elements. Find it in P&L as well, which is included in this 420. So included tax on income from associate of 20. So we remove tax of 20. And there's something that I almost omitted in what do they call it? They call it one funny name. Statement of recognized income and expense. So there was a foreign exchange difference of associates, a loss of 10. So apparently, maybe that associate is a foreign associate. Difference of 10. Now I've captured everything. So what's my expected closing? What's the balance?
$16, sir.
Yeah.
610. Well, what's the closing balance? So 540. There's a difference of 70. What do we call this difference?
Dividend paid now.
Not paid. How can you pay dividend to your associate? Somebody you
Sorry,
invested in.
dividend. Okay. Dividend.
Dividend received from associates. You receive dividend from them. It's an inflow. It's be an inflow under investing activities. I'm done with that movement. Then the next item is inventories. So opening is 1160. Subsidiary, how much? Subsidiary we acquired, okay. Inventories and work in progress, 180. So what's the expected closing? How much is that? Is this correct?
1,340,000, sir.
And what's the closing balance of my inventory? 1,300. Closing balance is 1,300. So what do we have? Decrease in inventory of 40,000. Inflow, outflow. Inflow. We have inflow. After inventory, what's the next item? Trade receivables. Opening is 1060. There was no subsidiary with and closing is 1,220. Closing is 1,220. There is an increase in trade receivables. What's the movement?
$160,000, sir. Outflow.
What's the next item? Cash and cash equivalents. No need to check the movement. Share capital, share premium. I don't even need to. I have to. Was there any share issued? Let me just do the movements. What's the opening balance? Opening 170, closing 200. That's a 30 difference.
Share premium. Opening 30, closing 60.
So there's a movement of inflow. Is there anything explaining this movement? Okay, yeah. There is a new share issued of 60. Okay. That's that. Okay, good. That is explained. Evaluation reserve. I think we have already settled this. That was that what do they call it? That impairment loss on PP of 190. So that's settled. Retained earnings. Did they say anything around that? What is it? Retained earnings. Profit for the year 17. 8. Okay. Let's just do our retained earnings.
They paid dividends, so
They pay dividend of how much?
I saw dividend somewhere when you were scrolling.
So dividend of 892, Abi?
Yes, sir.
Yeah, so let me not bother doing that. However, yeah, so out of these 892, 800 of it was an investment. Yeah, this note 4, investment in Waterside. So I need to remember. So let me use that retained earnings to do that. So dividend paid. So as per retained earnings schedule is 892, but investment in Waterside was 800. This is an outflow under investing, and the dividend paid to parent shareholders is actually 92. So this will be an outflow in financing. This will be an outflow in financing. So that's the movement there. That's that for retained earnings. Now, NCI. Movement in NCI from 90 to 120. So, note 10. Non-controlling interest. What's my opening balance? 90. He will get his profit attributable to NCI, profit share to NCI. You get that in P&L. Where is it? Yeah, 50. 50. 50. And don't let us forget the acquisition of subsidiary that we computed when we were computing goodwill. Where is it? Yeah, NCI for the year. 96,000. So what's
Sorry, sir,
my
before I get lost,
okay?
this when we're doing the earning, this retained earning, we didn't make mention of profit for the year or so, something like that. So I don't know. Are we
Which
not
one? When
supposed
we're
to
doing
take
which
in
one?
this retained earning stuff?
Okay, this one.
Yes, sir.
So I didn't bother doing the movement and return
Oh,
earnings again. So I know that the
okay.
balance will be the dividend paid.
Oh, okay. I
I know that the
understand now.
balance, except if I just
Yes,
want to
yes.
calculate, but
Yes,
the movement in retained earnings is dividend paid.
yes, it's true.
So what I just did was just to remove that investment that they said they made to Waterside. Then the only dividend paid I will recognize is just 92 because
Yeah,
they told
guys.
me that this 800 is investment. Okay, so what's the expected closing here? Can you add this three for me?
So 36, sir.
So what's my closing balance? I think it was 120. So the difference is dividend paid to NCI, which is 116. To be outflow in financing. Then what's the next item? Non-current liabilities. I think they did a breakdown for us for non-current liabilities. Yeah, they did. So the first one was this deferred consideration. This 58,000, the movement, the one we have captured is, we have captured 50,000 there. We captured it when we were doing our computation of goodwill. We used the present value, 50,000, but now they're having 50. And they already explained to us that the remaining 8,000 relate to interest. So there's an interest payable of 8,000 here that we have not used that we really need to consider. Though it's a non-cash movement, this 8,000. So I need to remember to treat this as part of this interest payable. So I would hopefully remember to do that. Then the next one is liability for the purchase of PPE. So the borrowed money to buy assets, this would be an inflow. So this is an inflow of 288. So let me just note that. Liability for acquisition of VP is clearly an inflow. Then loan payable. This is also an inflow, 1110 to 1242. Loan payable. New balance. Closing balance. So This is increase in loan. How much is this? What's the difference?
132, sir.
132. This is an inflow because I'm taking loans. This is an inflow. Then there's tax, deferred tax. Let me treat that along with this. Normal taxation. So let me try and do my income tax. My opening that will comprise of current. How much is the current? Current and deferred. My current tax from here is 370. 370 current tax. Then deferred is 50. So 370. Deferred is 50. Then my income tax for the year. What's my income tax for the year? Go to my P&L. My income tax for the year is 420, but I need to exclude that of associates because that has been attributed to investments in associates. If you remember, we already deducted it from investments in associates. So 420 minus 20. And there was no other tax again. So 420 minus 20. So who can tell me what's my expected closing balance for taxes? What's the addition of these three?
820.
820. But what's the closing balance that I have? My current is 380 and this is 60. So 380 plus 60. How much is this? 440. So it has decreased, meaning we have paid some of our taxes. Decreased, expected closing 820, but the closing was 440. So we have paid. How much did we pay?
380.
380.
It will be an outflow. So apart from provision for deferred tax, there is retirement benefits of 52,000, but they gave us the movement of that year. And in the movement they gave, I can see past service costs. If you remember that this is non-cash, and they said they has already charged it to income statement, so we need to adjust for this. This is a non-cash item. Contribution paid. This is the actual cash. This is the pension paid of 14. So I need to note that the current and past service costs of 26,000 is a non-cash item, so we need to adjust it properly. Why the contribution paid of 14,000 is an outflow. That one is an outflow. That will be an inflow now. If the closing is not less, that's an inflow, which is unlikely. So practically you should have outflow. Okay, I'm done with non-current liabilities. Then let me go to current. They already gave us the breakdown here. Let's see the movement in payables from 24 to 2682. 15 trade payables. Two, 4. So 2682. There is an increase in trade payables. By how much? Is that 282?
Yes, you're correct.
Inflow, outflow? Inflow. That's an inflow. Also is interest payable. So what's my opening balance of my interest payable? It was 90. What was the interest expense for the year? Interest expense for the year is 80. Interest expense for the year is 80. What was my expected closing? That's 170. But what was my closing balance? What was my closing balance of my interest payable? 100. Okay. They said this one is included in interest expense. This 8 already is included in interest expense already. Difference between this 50 and 58. This deferred consideration. Okay, so let's see how I want to deal with that. So since it's included, let me say finance cost from deferred consideration. Is a non-cash item. So this will be how much? 162. So my closing is 100. So what's the difference? That's my interest paid. Of how much? paid interest of 68. Or if you don't understand this, you can still do it like this. You can do 170. Then the closing balance will be that 100 plus 8. The 8 of the deferred. So this will be 108. And it's still going to give us 62. Still going to give us 62. So this will be outflow, financing activities. So yeah, now we are done with everything. So what's remaining is just to prepare our statement of cash flows, which is the easiest part of it, using indirect method. So what's the name of the company? Breakthrough. Consolidated statement of cash flows using indirect method. For the year ended 31st December 2022. Creating activities. So in my P&L, what's the first item? I have my profit before tax of 1,380. Profit before tax 1,380. I need to move back to profit from operations. So I need to add back this 80. This interest expense of 80. Yeah, 80. Now I can adjust for non-cash items. And adjust for non-cash items. And what are the non-cash items that I have? Of course, there is share of profit of associates. From the question, that's share of profit of associates directly above this PBT, and that's 60, which we are going to deduct. So 60. And also, remember there was depreciation that we're told in the question that there was depreciation of 120,000 from note 1. Yeah, note 2, 120,000. And also, in note 1, there was impairment of goodwill that we computed. Computed an impairment of goodwill. How much is it? Yeah, 16,000 non-cash. Again, to add it back. Impairment of goodwill. And also, remember there was a current and past service cost that we identified of 26,000. So these are my non-cash items here. So just to distinguish it, can you help me sum the non-cash items together?
$102,000.
102. Then we do changes in working capital. We had increase in inventories from our workings. This one was a decrease. So decrease in inventory of 40. We had increase in trade receivables and increase in trade payables. So what are they? Increase in trade payables was 282 inflow. And increase in trade receivables,
160,000.
160,000 outflow. So how much do we have?
$162.
Okay. So can you cumulate this for me? On this plus this plus this plus this.
$1,724,000.
Then don't forget the contribution paid that we identified. To those we paid 14. And also the income tax paid. Also from our workings. How much was the income tax paid? 380. So this will be a net cash inflow from operating activities. How much is that?
1,330,000.
Inflow. Now let's go to investing activities. And my investing activities here, for my workings, I can easily get them. I have acquisition of PPE of 790. Wait, there was one loan that they took. That means liability of 288. So that means they are owing 288. So that means this 790, I was supposed to even, they didn't pay everything. They didn't pay everything in cash. So what's the difference?
502,000.
So they only paid 502 because for them to be owing 288, that means they didn't pay everything. Then acquisition of subsidiary 200. What again? After acquisition of subsidiary, we already captured all this. Okay. Dividend received from associates, 70. Don't let us forget that investment in Waterside. That 800,000. They said they invested in Waterside. So how much? How much is this?
One four three two
143
thousand.
too.
Negative. 1,432,000 negative. Outflow.
So financing, we already did our share capital, I think was 30,000. Share premium, 2,000. When there was interest paid of 62. Then side interest paid, there is loan paid, no loan received, increase in loan of 132. Increase in loan. Then dividend paid to NCI. Dividend paid to NCI. Dividend paid to NCI. Dividend paid to parent shareholders. Dividend paid to parent shareholders. I ignored this because it's the money I'm owing from the asset I bought, so it's non-cash. Okay, so how much is everything now?
So please, can you bracket the interest paid?
Okay, thank you.
Minus 78.
So net cash outflows from financing activities.
78.
So reconciliation of cash and cash equivalents. So cash and cash equivalents during the year, which is 1,330 minus 1,432 minus 78. What does that give us?
Minus 180.
Then what's the opening cash and cash equivalents? That's 280. What is the closing cash and cash equivalents? Which is 100. It should be the same thing as the closing here. Okay. And that's the end of this. Okay, somebody was asking trade payables of the subsidiary. We don't have any trade payables for subsidiary in description. There was no trade payables for subsidiary. No, we don't. Although we didn't touch it. All right, guys. Enjoy the rest of your day. I will update you on our next plans. The next thing we'll be doing majorly is ratio
Ah,
and EPS.
you say I should remind you about the changes that was made to IFRS 18 as in regard to IS1.
Yeah, is noted. We'll definitely
Okay.
revise that too. Yeah.
Okay.
But let's clear out ratio and EPS. Let's solve past questions on that and all of that. So I will update you on that. That's the major thing that we need to take out as immediately as possible. But in the meantime, go and solve as many questions as possible on cash flow. And for the XBR guys, go and solve as many questions as possible on consolidated cash flows. If you need more questions on consolidated, just let me know. I will share with you. But at the very first instance, solve this and make sure you understand it yourself. So thank you very much. Have a wonderful day. Bye.
Thank you, sir.
You're welcome.